Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and with me today is Marc Ducler. He is the Managing Director of Astral Resources. ASX code is AAR. Now, some of you will remember that Marc was the former Managing Director of Egan Street Resources, and they were taken out by Silver Lake Resources. So these guys have done it before. I suspect that they are on the road to doing it again. And they're my favourite commodity, gold. And for those of you that haven't been sitting under a rock, gold is having a very strong run at the moment. What they've got is in the Eastern Goldfields, over 1 million ounces. And it's the first time they've been on small caps. I'm pretty excited because I love this story. Egan Street, as I said a moment ago, they've done it before. They're in the Eastern Goldfields, very hard to ignore, but they've not been on small caps before. So, Marc, before we get into it, why don't you give us a brief overview of Astral Resources?
Okay. Thanks. So Astral Resources, our projects are located in the Kalgoorlie region. We have the Mandilla project, which is 20 k's from West Kambalda, 70 k's from Kalgoorlie, and it's only 20 kilometres from St Ives gold mine, which belongs to Goldfields, which is obviously a top-tier global gold producer, and they have a 4.7 million tonne per annum process plant relatively close to us. Our second project is Feysville, which is only 13 k's south of Kalgoorlie and has Northern Star as our neighbour to our immediate north. So there are two projects that we've got, 116,000 ounces at Feysville and over 1 million ounces at Mandilla.
All right, so this is in an area which is in the heart of the Eastern Goldfields. I'm curious because Egan Street Resources is very successful. When you came into Astral, what was the attraction?
Look, a project in that Kalgoorlie-Kambalda region is very hard to come by, and we're of the view that if we can get that to a reasonable scale, there's absolutely no chance that it's not getting developed. And once you start looking at developing a mine, that's when you can really start to generate some opportunities for good returns for our shareholders. And over this 3-year period, we've gone from 30,000 ounces at Mandilla to over 1 million. We're certainly at that scale where we're right to take it forward.
But talk to us about how you went from 30,000 ounces to 1 million in, what's that, 3-year period. That's quite a growth, because I know companies out there in gold that are still working towards that 1 million ounces over a lot longer period. So what's giving you, is it just the ground you've got and the grade, or?
Oh, look, the Mandilla project it's a large intrusive. It's on the contact between the sediment and this Mandilla syenite rock, and we've been drilling the western portion of that. At the end of the day, this growth from 30,000 ounces to 1 million is based on drilling. We did 45,000 metres last year. We're probably already over 20,000 metres year to date in 2023. We expect to hit 30,000 metres by the half year. And depending on how we progress, there's every chance we'll get to 60,000 metres by December of this year. So there's no rocket science there. It's drilling. It's obviously putting the holes in the right spots. And we've been working on our interpretations for Mandilla. And there's some high-grade trends that we're starting to unlock the secret as to how to continue to nail those intersections. And so that should stand us in good stead to continue to grow. Bearing in mind last year, we added 250,000 ounces at $16 an ounce. So that's really cost-effective growth as well, especially given the gold price, as you stated today, at $3,000.
I know. I've got a very happy smile on my face at the moment, and I think it's going to get stronger. We speak about Mandilla. Is that your core focus at the moment, given the size of it and what it's delivered to date?
Absolutely, and more specifically at Mandilla, Thea is one of our deposits at Mandilla, 878,000 ounces inside that one deposit. And when you want to go into development and you want to make money, it's all well and good to have 1 million ounces on the books, but what you actually want is you want one single large-scale deposit, which either is one big open pit or one significant underground development, because establishing access and actually, whether it's conducting the pre-strip to get to the ounces or building your infrastructure underground, like our Egan Street example that was bought by Silver Lake, you want all those ounces in one position. And with Thea, 878,000 ounces in the one large-scale open pit, which we know we're getting very close to having the critical mass where we can then really advance our mining studies. And again, specifically in relation to those mining studies, we're going to do the work at a $2,000 gold price, $3,000 today. So we are looking to establish a very robust gold business that can withstand quite a lot of moves in the gold price cycle.
You speak about Thea. Where are the other deposits that you've got around Mandilla?
So the ones that are going to make us money, certainly.
Yeah,
Thea.
love that. Love that. The ones that make you money.
Yeah, look, I think you can build ounces that aren't going to generate cash flow in a mining situation. So Thea is certainly going to be a big cash flow generator for us. EOS, we grew by 190% last year, and we actually grew the grade by 30-odd%. So EOS is certainly a profit generating opportunity for us now. And Hestia, we've been doing an infill program just this year. There was only a 12,000 ounce deposit when we did our last resource update in December of 2022. And those results are starting to flow through now. We'll be putting them out within the next week. And we're certainly confident that infill drilling we've done at Hestia is going to show us an order of magnitude of growth at Hestia. And it should also be a profitable opportunity when we look at our development studies later in the year. So
the latest announcement has shown that you've got a high-grade gold zone outside of the Hestia zone. Is that right? Am I getting that right?
So certainly we put out some results in relation to the Hestia infill drilling. What we had originally, and we actually telegraphed this when we put out our mineral resource estimate in December 22, we put out a small 12,000 ounce resource, and we had a lot of called unclassified resources, which basically means we didn't have the drilling density to be able to call them an inferred resource. And now we've done that infill drilling, and we've reported results 10 meters at over 6 grams, 6 meters at 6 grams, 8 meters at 3. There's some really good results there. And so that 12,000 ounce resource, and certainly when you look at it on a long projection, you can see the opportunity to significantly add the scale and the grade. So we'd expect certainly order of magnitude increase, so many hundreds of % increase, and then certainly a significant increase in the grade as well at Hestia.
With Hestia, does that change the focus for Mandilla? I'm just trying to work out where you're going in 2023. I guess that's what I'm coming from, because we've got over 1 million ounces. You're heading into development from the sounds of it. You've done it before, Marc. I just want to get to it from an investor point of view and where the value adds are going to be in 23, I guess, where the milestones are. This is more drilling, more results, but where do you go further from here to add value?
Okay, so no, it's a fair point. So Thea is the main game. That is the pit that we will be in a study phase. We would come out saying that we're mining Thea for 8-9 years, producing. Everyone wants to target the magic 100,000 ounces per annum. And that's where we'll be targeting our study phase, right? We have to do the work to generate that. But at the same time, to generate that robustness in your project, you want to have a couple of other opportunities, like sugar sweeteners that you can put into that mill feed schedule. Hestia will certainly be that. EOS will be that. The work we're doing at Feysville, because we put out a result on Camperman in this announcement, that was 10 meters at 4.7. So Camperman is a really interesting opportunity for us. And the results we put out probably must have been a month ago now. We see an opportunity at Rogan Josh and Ethereal, not to mention Think Big. So when we go off and we drill these other deposits, it's about generating the opportunity to put those sweeteners into the project schedule up front, generate some more high grade, some higher revenue, and it helps to pay off the capital that you need to build your project. So when we do come out with our study phase, there will be things like we'll need to inform the market as to what sort of a process rate we're chasing, what our ounce production needs to be, obviously capital cost, mining and operating, but all these additional deposits. And again, everywhere we're drilling, we're demonstrating our ability to find another resource, and a resource that we want to be able to bring into our mill feed schedule. EOS certainly will go into the schedule. These results from Hestia are indicating that has the capacity to go into the schedule, but we have to do a new resource now for these Hestia results. And then it's very early days at Feysville, but there's certainly 4, if not 5 targets that we're keen to go back and drill, again, with the intention of generating 50, 100, 150,000 ounce deposits to help supplement that base load that Thea will give us in a mining schedule.
How far away is Feysville from the main project?
50 Ks. It certainly cuts. I mean, Mandilla as itself, all the projects are going to be a direct haul truck straight to a ROM and into a crusher. Feysville, we would need to rehandle that into some road trains and truck it. But 50 Ks is very manageable nowadays, especially at $3,000 gold price.
Yeah, let's bring that back in again. Let's hope it's 3,200 soon. Marc, I'm just looking at how you develop this project as you go along. Is it going to be a development or another Egan Street? I have to ask that question because that's where you went before, which gave great value for shareholders. Is it develop it yourself? Is it someone else coming in to give shareholder value? Or do you do a bit of both and not build your own processing plant but use somebody else's? So there's a lot of different ways you could go. Or is it far too early to ask any of those questions, Kerry?
Look, the interesting thing is about the M&A opportunity, and yes, I mean, we see Ramelius as being quite active with now having a go at Breaker Resources. So, that's something that we don't control as Astral Resources. The only thing we can control is just to do very good technical work, build a very solid, robust, standalone project. And on the basis that you do that, if there is a mid-tier that ultimately has a heap more cash than what we do, that wants to pay for it, then that's a shareholder decision. I mean, at the end of the day, and if an offer comes, we put it to shareholders. They either want to roll into the offer or they don't. It doesn't change the work that we do. And we're going to build a project that can manage its way through the inevitable fluctuations that happen in the gold price. So, yeah, for me to sort of say one way or the other, I can't. Well, I can. Okay, well, what I can control.
Yeah, so let's take out the M&A side of it. Mm-hmm. And let's say that doesn't exist, but you're going into development. There's a lot of infrastructure around you. Would you go through the build your own processing plant, or would you go and potentially use somebody else's? Because I'm sure there's opportunities out there to use somebody else's plant, and that potentially would be a good way to go.
Yeah, so we'll certainly focus on making sure we don't destroy value. And so on that basis, if it was a toll treatment scenario, you need to find someone who's got a big enough process plant, because we would want to mine 2.5 million tonne per annum.
Yeah, good point.
Push that into a process plant, and the toll treaters, all toll treaters run very small process plants, 1 million tonne, 1.2, 1.3. So I don't think that's the most logical outcome for us. And also, I'm happy to truck ore from Feysville into a Mandilla process plant where I can potentially achieve a $15 unit cost for processing, as opposed to going to a toll treater who's going to charge upwards of $50 a tonne. And I'm talking about how you do not destroy value and you want to maximise revenue. And so you've obviously got to work through what the capital cost component will be of your project versus paying for a much more expensive operating cost. But if you're carting to a toll treater, you're paying your 15 cents per tonne kilometre to cart it somewhere, plus over the top costs for processing. I mean, I'm not answering the question, but I'm sort of certainly leaning
No, but actually, that's been fascinating for me, because just laying it out like that explains how you can destroy shareholder value by going down the wrong road.
Yeah, look, plenty of people, we call it mining for practice. So if you're not careful, you can dig up your deposit, exhaust it because there's only a certain amount of ounces in the ground, send it somewhere to try to make money, make no money. That's called mining for practice. And you don't want to be mining for practice. I don't need any extra practice.
Right.
If we're mining this to generate profit and return that to shareholders.
Yeah, and that's I do appreciate that that's your focus, which is fantastic. Talk to us about the milestones for 23. I'm talking to you in April 23. Are we coming into a PFS? Are we going to have another mineral resource update? What do you think of the milestones as we go into 23?
So drilling and more drilling. We have a genuine deposit, therefore we want to put holes in it. And I tongue in cheek make the comment that we were drilling from the 10th of January, which is when the majority of our peers were probably still defrosting their Christmas prawns and still enjoying that holiday season. So we're very keen to put out a new resource come the mid-year based on the outcome of that resource. And obviously we're already having discussions around what mining costs are. Obviously it is a very inflationary environment.
Yeah.
Based on that resource outcome, we would then be looking to work towards a study phase. And initially we'd put out a scoping study level of work. So we wouldn't be looking to declare reserves, but certainly looking to forecast to the market the capital costs, operating costs, size of the prize in terms of the number of ounces that we'd be mining over a life of mine. And we'd be looking to do that for Q3. And then, following that, we would then go straight into a pre-feed study and we'd be pivoting to more drilling. And it depends what's going on. I mean, we're quietly confident that under EOS, there's an opportunity for another fresh rock resource. We put a couple of holes into EOS. So to take a step back, we've got Thea, Hestia, EOS. There's also Iris. Now, EOS is our 30,000 ounce paleochannel deposit, which is 1.6 grams per tonne. We've drilled 3 holes, 3 RC holes. We're waiting on results for those, but we're of the view that there's definitely some mineralisation underneath that in the fresh rock. And when you're looking at this from a geology perspective, we've got this big Mandilla granite, or Emu Rocks granite, Mandilla syenite. We've got a number of names for it that runs all the way along our tenement. And we are drilling along that western boundary. So we have found Thea on that western boundary. Thea historically was a paleochannel deposit, and now there's 878,000 ounces of gold underneath it.
Wow.
This is a paleochannel deposit. We've drilled 3 RC holes. We're waiting on the results, but visually it looks as if there's fresh rock gold mineralisation. Is it going to be a Thea 2.0? I'm certainly not going to say that, but there is potential there. So we're going to continue to drill, because the bigger we make our resource, the more robust we make our mine development, the more opportunity we have to successfully take that through the next phases of study, get the necessary debt, look to build our project. Because as I said before, M&A to the side, that is the only thing we can control, and that's what we're going to work on.
I noticed this is the first time on small caps. We've been flying a little bit under the radar. Was that a deliberate strategy to get to a level where you went, you know what, this is a very robust project, and now we're ready to tell the world? I just, because I'll tell you why I'm asking the question. I think your share price is a little bit under the radar, if you like, for a project of this size and in comparison to your peers. And I'm wondering if that's because you haven't been out there talking about it that much, or I'm just want to know from our audience point of view, 8-cent share price at the moment, strong gold price, over 1 million ounces, Eastern gold, like you're ticking all the boxes.
Yes. Look, I think the truthful answer here is obviously it's a pleasure to talk to you, but other than that, I detest doing this marketing aspect of the role.
Oh, no, ladies and gentlemen, he detests it, so we got him on.
And it's something we do acknowledge that we need to work on, because, it's like if a tree falls in the forest, it's only when you hear it, only if someone's there. And similar concept here. I think this is a very strong project. My background is metallurgy, so some might ask, why am I running an exploration company? And sometimes I say, I don't know. But we have ticked all the boxes from a metallurgy perspective. I think even one of the worst metallurgists in the world will be able to successfully extract the gold out of this. This is 95% recovery, 70% gravity recovery. I only need to grind to 212 micron, which means that's very, very coarse. And one of your biggest input costs when you're processing is power. So the coarser you can grind it, the less power you have to input into your processing unit operation, the cheaper it is. So there is no hairs on this from a metallurgy perspective. We've done flora, we've done fauna. It's on granted mining tenements, so there are no native title imposts. there is very little in front of us that are going to prevent us from taking this through to development at the moment. So I'm not sure I answered your question other than say we don't do enough of this IR, and it's something that we need to work on.
Well, I'm glad you started with us because I love bringing stories like yours, because I do think it's a very robust story. And I'm not blowing smoke up, but, you know, it is a good story. And what I love is that you've done it before with Egan Street, and you said it a number of times during this conversation, it's all about shareholder value. So you do care about shareholders. So before we wrap it up, I want to ask, have you got skin in the game, Marc?
Yeah, I invested when we joined. So I joined on the 24th of December 2019, and when we did our first capital raise, I certainly put my money in, and I was buying stock earlier this year before the drill rig started. It's a little bit hard as an MD. Once the drill rigs are turning and you've got results coming in, you've got to have the market cleanse before you can buy. So it's a little bit harder for me to continue to buy. Yeah. But I have convinced my wife to buy some more when I have a next opportunity. So we'll see how we go.
Well, there you go, ladies and gentlemen. I love it when they say they have skin in the game, because that says that they have, I guess, a lot of confidence that they're going to take the project forward. All right, Marc, we're running out of time. Let's wrap it up and give us 3 reasons why you think people should sit up and take notice of Astral Resources right now.
Okay, well, first and foremost, location. We have 1 million ounces in this Kalgoorlie-Kambalda region. So from Kalgoorlie in the north to Norseman to the south, 100 k's either side of that, we are the single biggest deposit that is still in the hands of a junior miner, right? And we are of that scale that is impossible for the mid-tiers and the majors in that region to ignore, number one. Number two, we've been drilling since the 10th of January with 2 drill rigs turning. We wouldn't be drilling if we didn't have confidence in our ore body. So it will continue to grow. The growth is certainly not over at Mandilla, and you'll see that come the half year. And finally, you mentioned Egan Street a few times before. We IPO'd a project, we grew it to 500,000 ounces. We did all the development work. We had the mine fully permitted. Just before we got to that stage of attracting the debt funding, we were taken out by Silver Lake Resources, and it was profitable for our shareholders, and it was profitable for me. It was a life-changing outcome for me, and I'm thankful for that. Now, when a mid-tier looks under the bonnet and decides to spend, at that point, it was a $70 million transaction to buy Egan Street, they don't do it if the technical work has been half-baked.
Yeah.
And it is exactly the same team from Egan Street has come across into Astral Resources, and we're doing the quality technical work that will attract us funding. And in the event that the M&A opportunity comes, which we parked during our discussion, when they look under the bonnet, I guarantee you it stacks up. It'll stack up for funding, and it'll stack up for an M&A opportunity if it presents. Thank you.
Well, Marc, it's been great to talk to you, and clearly Astral Resources are in good hands with the former Egan Street boys back at it again. So, ladies and gentlemen, commodity, tick, the location, double tick, and thirdly, triple tick on the technical team, because if you do the work and you do it properly, then things can start to get very powerful, profitable, whatever you like to say. But Marc, great to chat with you. Come back and towards the middle of the year and give us an update. But for now, it's been an absolute pleasure to talk to you. Thanks for joining me on Small Caps.
Cheers. Thanks very much, Gary.